Okay, great. Hi, everyone. My name is Taiwo from Forex is Freedom. And once again, I'm just going to go through a quick video just to go over a previous trade that I made during this week. This trade happened to be on GBP Swissy, and I took the trade on Monday, 13th of July, 2020. And yeah, I got 100 pips off this trade. It was a really good trade. I have actually started to really just slow down my trading. Now I'm looking to take one, maybe two trades in a week. I generally don't go over 3 trades, and some weeks I'm only doing 1. And if I don't see a setup now, I'm actually not trading anything. Instead, I just prefer to run through the replay function. That helps to, sometimes you have that need to trade, which is obviously a massive weakness if you want to be consistent and professional in this game. So this was a trade I took, GBP Swissy. I went for 100 pips. So I'm just going to go over what I was generally looking at when I actually took this trade. So I'm probably just going to leave everything on my screen so you can sort of see my thought process. So here's a 4-hour. This is GBP Swissy. You can kind of see that there was this ongoing push down, which I wasn't able to get into at any point because obviously I just didn't see. But when I did eventually take a look at this this pair, I did actually notice. I think I took a look at this pair on it was the 9th. Yeah, 9th of July. That's when I took a look at this pair. And I did actually notice that this pair, in fact, let me just go to the daily. Okay, I'll just sort of do this very quickly. Get rid of some of the stuff here. All right, so I did notice on this pair that price on the daily was obviously in a downtrend and had actually validated this macro bearish trend line. And in fact, that's the white trend line. And in fact, had also made a lower low of this sort of area here. So this trend line here had gone down, and price had actually validated it a few times before breaking it. Now, I knew that at some point price has to come back to this macro trend line here for either validating and trapping or validating it one more time. And what I mean by trapping is it just needs to break it to induce the buy liquidity. So if we go back to the 4-hour, I'd seen that this trend had been going down and had now been broken. And then price had sort of broken this white trend line and tapped this support structure here and rejected it. So now I knew that price was actually going up and it was going to start making higher highs, higher lows. Now, this black trend line here is my inducement. This is where price is literally inducing buys up, well, on its travels to the macro trend line. So this trend line here, this black trend line, is the trend that most people will start buying into. You can see on the 4-hour, we've got a validator here. So let me see if I can just do this. Okay, great. Okay, great. So we've got price tapping here. We've got another tap here. And it just continuously taps, taps, taps. And then this final place here on the week I was looking at, I saw that price literally had started to show that this is now a bullish trend up. And what I'm looking for is the stop losses of all the traders who are buying into this trend, because I know that all of the stop losses are generally going to be contained in this sort of area here. If I can just grab that, show here and there. So you're going to have this sort of massive liquidity pool, if you like. If I can, all right, of stop losses, of different traders' stop losses all gathered up. And those are the sort of conditions I'm sort of looking for. Now, you've got to remember there's a lot of other factors that come into play, and what I've mentioned here is just a sort of overview of the various factors. But what I'll do, I'm going to go a bit closer. So finally, if I can just bring this up actually, I'm going to bring up the object tree just so you can see the sort of things I was actually looking at. Okay, great. So call out. Call out. Okay, good. So on the 9th, it says here we have had 3 levels of push down on the macro. So this is what I was talking about here. So you've got 1, 2, 3. So firstly, just to let you know, counting levels is quite an old school approach, but it is more art. It's more of an art than a science. So it's not something I generally use for trading, but it is something that you can look at when you're looking at how when you're looking at manipulation. So there is manipulation in the markets, and sometimes they use the number 3 as a means to psychologically impact the retail traders, if you like. So anyway, we have had 3 levels of push down on a macro. We can start to look for seller traps so we can get to the macro trend line. What do I mean by that? I'm talking about now we've broken this trend line, because remember I was looking at this on the 9th. So on the 9th we're sort of here. So this trend line had already been broken. So I knew that at some point price is going to get back to this white trend line here. How it does that is up to price, because price does what it likes. However, there are going to be certain conditions you can look for that show when price is being manipulated. And one of them is this black trend line here. This is an induction. So what I mean by that is, in order for price to keep going up, they need lots and lots of sellers to come into the market who will then literally sell into price, so that way that market makers can buy into the traders' sells. So price is going up in this specific instance, and this is a different kind of induction. This is more of a macro induction, where in order for price to continue down, they need buyers to come into the market. So I'm actually working along this black trend line here. This one is actually the inducement trend line. Now, this one says we can start to look for seller traps so we can get to the macro trend line to trap macro buyers. So what I meant by that is, if you look at these red arrows, my idea is that price is going to somehow get up here, maybe break this trend line, induce lots of buyers before continuing down. It might do that, it might not, who knows. So my specific focus was this inducement trend line here, the black trend, and I came back to the markets on it was actually on the 13th actually. It says here 14th, I believe we make it back to the macro trend line in order to induce and trap buyers, making a higher low of the macro bearish. Okay, great. So this would have been my belief after I took the trade, which is fine. I actually took this trade on the 13th. So if I quickly show you guys what I'm looking at on the 13th, this is what I had. This was my screenshot. This was done obviously on the 13th. And well, this trade, in fact, was finished on the 13th. Let me go back to my other screenshot. What am I looking for? Where is it? Oh, here it is. Okay, great. This is where I entered. And yeah, this was on the 13th, 2 o'clock. So just to quickly give you an idea, this is on the hourly, and on the 13th, which was the Monday, I came back to the markets, and this is what I saw. It had literally started to do what I thought it was going to do, and so I set a sell stop and on the hourly and just waited. When I saw this hourly close of a wick, I figured, okay, great. My sell stop is down here. My TP is going to be around the lows. My idea was price was going to break below this level, this structure here, because this is where our liquidity pools are generally going to be focused. However, obviously you place your TP a little bit above, if your TP is below, a little bit more above. That way, if price doesn't make it all the way, you have that sort of room to maneuver for your profit levels. Anyway, so yeah, I set my sell stop and waited. So if I go back, let me just go back to here, back to the charts, and let's take a look. So on the hourly, let's go back down. I'll show you what I was looking at. So we had this on the hourly, I think it was around here. I came back to the market. So if we look at this, you can see the previous week's high. It's just here. So this is sort of like the conditions I'm looking for. So here you've got your basic M formation. Previous week's high is here. So a lot of traders are waiting for the, they've got their sort of pending orders above this level. And other traders are looking for an entry where they're looking at this sort of thing here. So they're looking at that. So if I make this, let's make that red. Okay, so you've got other traders, they're looking at this sort of level to be broken, which it was on the Friday. And then on the Monday, what they're looking for is a sort of retest. So that happened. So now you've got more buyers entering the market. And then there's other traders who are going to be looking for the previous week's highs to be broken. So that's what happened here. You can see price broke it, closed above, and actually stayed above for that hour here. So there's more buyers entering the market here. And a lot of these guys will put their stop losses down here. Excuse me. So when people are buying, their stop losses are going to be literally sells. So they're buying, they're placing their stop losses here. And what the conditions I'm looking for is obviously market makers want to go back up. So what they're needing now is everyone's buying, which is happening. So they need people to start selling. And what they'll definitely be looking to do is tap into a sell liquidity here so that they can continue pushing the market up, because obviously they're going to buy into those sells. So anyway, around this point, I'm seeing prices breaking the previous week's high. And then we find this shift. This candle here, 8 a.m. shift, London Open, it just shifts against all buyers. And what it generally does, this isn't me looking to enter, but what I'm looking for now is for price to try to make a new high, which it does around this point here, which is 1 p.m. London time. Try to make a new high and fail. So it was at this point that I noticed price was not making new highs. Because if you look on the 15-minute, let's go back. You can actually start to see all the wicks forming here. And this is what I saw, price pushing up, closing, failing, pushing up, closing. Then you see this shift. And this shift really tells you everything you need to know. Now, I've placed my sell stop. It was at 1875. So that would have been, let's see, 1875, would have been around this point. Yeah, it would have been around that level, and I placed it at 2 o'clock. So it would have been this sort of time here. Excellent. So I placed my sell stop at this particular time here. I'm going to just do that. So it would have been around this point. I had my sell stop placed. And let me just let you guys see what I was looking at. So I would have had my stop somewhere up here above the highs. So I probably can't exactly remember what it was. It was, yeah, it was around there, around the highs. and I had my TP at, it was 100 pips actually, yeah. So what I did, I left my sell stop in play. Obviously, you've got it was a 30 pip, obviously a 30 pip stop loss, or it may have been 35. I haven't got an exact, but I know it was a 1 to 3 definitely for 100 pips. So it's a 30 odd pip stop loss and 1 to 3 risk to reward. I went for 100 pips, and I just left that in play. Now, obviously, you know, you can fiddle about and look at your charts, and what will happen is you can get shaken out of a trade, which was obviously one of my major weaknesses at one point. So what I generally like to do is just trust my analysis as, you know, a lot more. And I let it play out. So you can see here, you've got the M formation at the highs, yes, of the previous week's high. You can see that price on the 15-minute also closed above and stayed above the previous week's high. So what this is doing, this is actually now bringing more and more buy liquidity into the markets. Obviously, market makers can use that to push the market down. They're going to sell into all those buys. And in fact, you've also got another sort of micro M here at this point, where, you know, price goes up, comes down, and goes up. You've got this engulfing. Let me just, so at what time am I looking? You've got the engulfing at 3 o'clock and followed by another candle that actually comes up and again closes bullish with a wick, and then finally price engulfs. So you can see price comes back down to this trend line here. Actually, let me just move this. Move that. So you can see price comes down to this trend line here and again starts to induce buyers. And this is the point where you're going to have more buyers entering the market thinking, yeah, you know, my trend line is being validated and it's holding, and yes, I'm going to buy. And again, price just continues down. And then the following day, you've got this. This is another thing I would look for as well. So you've got the lows, the previous day's lows here. Hold on. So you've got, right, you've got the previous lows here, the previous day's low, sort of being respected. And again, you've got more inducement of buyers, but again, you can see the highs are not being broken. And this current high here, which you can kind of see here, if I mark it for you, is not being broken. So again, this is an indication that price is only inducing buyers, but the price is not actually going up. Because if price wanted to go up, it would go up. Simple as that. Good example is on the previous week's Friday. I'll show you. You've got a very similar situation where highs are not being broken, but guess what? Price actually breaks the high. So you can see it. Price breaks it and continues up, up, up. And, you know, that's kind of what you want to be looking for, because at this situation, if price was going to break the high, it would have broken the high, but instead it continues down. And I think I did actually secure a certain amount of pips. Let me have a quick look. Yes. So on the Monday, I closed, yeah, at 30 pips, closed partial profits, put the trade in break even, and I'm able now just to you know, let it hit its TP. I let it go into the following day, so you can sort of see. Let's go back. What I was talking about earlier, where this told me that, yeah, this trade is still definitely in play. Now, what I'm definitely going to say is this is a counter trend trade, because price is actually on its way up, in my opinion, obviously. price can actually do anything it likes. But I mean, there are obviously signs here that are still telling you that price wants to continue up. So you've got, you know, it made a higher low. And when I'm talking about higher low, I'm talking a higher low of this bullish structure here, not of this pullback, of this bullish structure. It made a higher low, higher high. It's now made a higher low. We can see maybe price coming back down. On Monday, we don't know, but you know, this is a possibility. If I let me do this, so you can sort of see there is a possibility that price might come down here, break this low, induce sellers before then just continuing up to the macro bearish trend line. However, you know, the idea is you always have to wait for confirmation of your analysis. Don't just jump in on the first couple of things, because, you know, if you look at the previous, at this Monday, the 13th of July, you know, if you thought, right, price is going to go up, straight away, you're going to look at this engulfing bullish candle right here. So if I just point it out. So you're going to look at this bullish engulfing candle right here, and you're going to think, yep, I'm in. It's broken that level here, retested it, bullish, engulfing, I'm in. You're also going to see this high of the previous week, and you're going to see a bullish engulfing and a close above, and you think, yep, I'm in. And even this candle here, 7 a.m. 1 hour candle, more likely, in fact, it actually did. On the lower time frames, it would have closed above and showed more bullish behavior above. And again, that would have just been pure induction, pure traps. And then if you notice, the candle straight after shifts against buyers. So this is what I'm looking for. After the inducement, I'm looking for a shift against trapped retail buyers. And, you know, there was a time when I would have got very excited and started to market execute. I no longer do that. It's purely pending orders. Now only very rarely market execute. So anyway, my pending order for sell stop would have been somewhere around these levels. If I remember, it was 1875 at 2 o'clock. And then obviously price made its way down. This point, obviously I'm securing my profits and leaving my runner. Here you can see price continue to induce buyers on the way down. Reason buyers are being induced is because of this obvious bullish bullish trend, which a lot of people are buying into. Some people will see this as a simple higher low of this trend. Fine, people are entering, and then it continues down. I knew that there was a higher probability of price continuing down in order to get the liquidity, because what a lot of these trend lines do, they like to target the liquidity. So what I mean by that is obviously people are buying into that and they're placing their stop losses usually below structure levels, you know, below this trend. Stop losses will be found, but also definitely below the previous swing low. And in my opinion, I believed the price was going to continue down to stop hunt the stop losses that are here, so that way, you know, market makers can continue to push the price back up. That happened, and I was able to get 100 pips out of it. And then now I'm obviously then just going to continue, you know, looking at charts and seeing if conditions are met for my setup. So yeah, that's it. That's it for today. Obviously, you know, whenever I take a trade and I feel like there's something worth posting about, I'll definitely put up a video. But until then, I will catch you all another time. So yeah, this is Taiwo from Forex is Freedom. Enjoy your trading week, everyone.